Hello once again, guys. Welcome back to Stock Radar. I hope you've had a great week so far. So in this video here, we're going to be doing a full analysis of Activision Blizzard. It is the stock that you guys voted on over in the group, and so let's go ahead and go into more details about this stock. So first of all, basic overview here. Activision Blizzard trades under the symbol ATVI on the NASDAQ. They have a price to earnings ratio of 50. They have a dividend yield of 0.5%. And Activision Blizzard is one of those weird companies that pays an annual dividend. So every spring they pay a dividend once a year, but the other 3 quarters per year they do not pay a dividend. So it's kind of an odd case there. Most companies pay quarterly dividends, some pay monthly dividends, and a few of them out there pay only annual dividends. And Activision Blizzard is one of those. And they have been growing and paying that dividend for 7 years, but obviously being a 0.5% dividend yield, it is not a significant amount of income coming from this investment. They have a market capitalization of $54 billion, and what you would classify this stock as, I would still say this is pretty much just a growth stock. It's kind of like Applied Materials where they pay such a small dividend. You know, I really wouldn't even consider this to be at all an income investment. So yes, you are getting some income from this stock through that dividend, but is still at this point in time predominantly a growth stock. This company is 38 years old in terms of the age of Activision, but in terms of these two companies being together, that is 10 years old. So in 2008, Activision and Blizzard merged together and formed Activision Blizzard. So moving on now, a little bit of a background on this company. Activision Blizzard develops and distributes video game content and services across multiple devices, and they now own King Digital Entertainment, which allows them to have even more share of the mobile gaming. So they have PC games, they have mobile games, and then also games available on the different consoles across multiple different devices. They have video games and entertainment products out there. And Activision Blizzard operates through 3 segments. Number 1, Activision Publishing. Number 2, Blizzard Entertainment. And number 3, King Digital Entertainment. So how does Activision Blizzard make money? They do this in a couple of different ways. Number 1, the way that we're most familiar with is the retail and digital sales of entertainment content. So traditionally, they mostly sold their video games to retail sales, but more and more people are buying video games as a fully downloadable item. And so what we're going to see later on when we look at the inventory is that Activision Blizzard has less and less inventory each year, and that's because most people are just downloading this content rather than buying it on a disc as you did traditionally. But they do retail and digital sales of entertainment content, and then kind of the controversial piece here is the subscription and in-game sales, the DLC. I'm sure you guys have all heard, especially if you're in the gaming community, and just so you guys know, I am not in the gaming community. So this, again, is not a stock I would personally buy, because one of my biggest rules when it comes to investing is invest in a company I understand, and it's also a company that I like, and I'm using their products. So obviously I don't play video games, so this would not be a company I would invest in. But I do know that talking to a lot of my friends that are gamers, they really get fed up with the fact that you buy a video game and it's kind of half-baked, and you have to pay for all this downloadable content to get the full gaming experience, and it's just a way for them to make money from it, and they are not really a fan of the shareholders when it comes to the actual end user of this product. And that, again, is something I don't really like about this company, is the fact that the end user is not a big fan of the way the company functions and is structured, and the way that they are looking to make as much money as possible. So the third way that Activision Blizzard makes money is by licensing software to other companies. The fourth way is through original film and television content. Number 5 is warehousing sales and logistics for other companies. And then number 6, most recently, is their addition of King Digital Entertainment, which allows them to make money through mobile games. So what is Activision Blizzard most well known for? Well, these are their 4 biggest franchises. Number 1 by far is Call of Duty, and they have been producing a new game every single year for, I think, over 10 years, or at least close to 10 years. And so that is a huge challenge that they face, where every single year they have to make a new version of this game that is going to be something different and enough for people to say, okay, I want to buy this, I want to be involved in that new Call of Duty. And so that, again, is their biggest piece here for them. Their biggest franchise is Call of Duty. Number 2, with their addition or acquisition of King Digital, they have the Candy Crush saga. That's under King Digital Entertainment. Number 3, World of Warcraft, an older franchise under Blizzard. And then number 4, their most recent of the group here is Overwatch. So first of all, let's go ahead and talk about the Call of Duty franchise. And what we are looking at here is the millions of copies of this game sold. And this shows you something here that I'm actually not really happy with. So what you can see here is that the most recent years, in 2017, Call of Duty World War II came in as the 11th most popular version of the Call of Duty series. Infinite Warfare was one above that in 10th place. Call of Duty Black Ops 3, released in 2015, was in 5th place. We see Advanced Warfare was in 7th place, and then Call of Duty Ghosts was in 4th place. And their most successful version of this franchise was Call of Duty Modern Warfare 3, released in 2011. Black Ops in 2010 was their second, and Black Ops 2 in 2012 was their third. So what we're seeing here is that this franchise, these Call of Duty games, are not as popular as they used to be. The last 2 years, they've come in 10th place and 11th place in terms of the most popular franchises. And so this is something that I don't like to see here. It means that people are not buying the latest and greatest Call of Duty. And this is one of the things we're going to talk about a lot here, is the fact that there's been a major disconnect between the fan base of this game and what they're actually producing in terms of that content. But based on what I'm looking at here, there is less interest in these new Call of Duty games every single year. And I would be surprised if I saw, their most recent one be in that top 5, seeing as the other ones here have been in the top 10 or lower. Moving on here, let's take a look at the monthly active users of King Digital, and this is across all of their apps. As you can see here, we're also seeing a decline with this app. So obviously Candy Crush was the most popular game under the King Digital name, but as you can see here, from 2014 to 2017, they've been in a pretty steep decline, and they have leveled off at this point in time at around 290, 270 million monthly active users. Moving on here, we will say that Overwatch looks like it's going to be a very successful franchise. This is the millions of Overwatch players worldwide, and as you can see here, from May of 2016, it went it was at 7 million, and then it went to 15 million in August, and now in April we were at 30 million, and as recently as May, 40 million monthly active users players for Overwatch. So this does look like it's going to be a very successful franchise, and it is growing, which is what I like to see here, that their actual game is growing in terms of the number of users that are playing this game every single month. And then as far as World of Warcraft goes, they do not supply any data as far as how many people are actually playing this game or how many monthly active users they have. This is from a forum called Warcraft Realms. Obviously, this is not a credible or reliable source, but I just wanted to share this with you guys. They're claiming that World of Warcraft only has about 1.5 million active subscribers. So back in 2010, I'm not sure what WOTLK is, but World of Warcraft had 12 million active subscribers. But now they're saying this number has fallen to less than 2 million. So again, I don't know if this is a credible source here, but they do not give data on how many active users there are playing World of Warcraft. So what we're seeing here is across their 4 franchises, we are seeing a decline in the interest for Call of Duty. We are seeing a decline in the interest here for World of Warcraft. Overwatch has been growing its monthly users, but King Digital as well has also declined. So the only thing really going for them right now in terms of their biggest franchises is Overwatch. The other 3 are in decline in terms of the people that are actually using these things every single month. So moving on here, this is what I was referring to when I said there's been a major disconnect between the user base for the games and the people creating the games. And this right here was the release trailer for Call of Duty Infinite Warfare. It is the 3rd most disliked video on YouTube. So as you can see here, this video got about 41 million views, 591,000 likes, and 3.7 million dislikes. So this is an absolute PR nightmare for a company when you spend millions of dollars producing a game, you release the trailer, and most of the people hate it. Now, people still did buy it, and it was in the top 10 most successful franchises, or the most successful games under the Call of Duty franchise. But this shows you that they really do not know their customer base well if they're going to release a product that is so poor that this many people are up in arms about it. And I grabbed this comment thread here for people who are not familiar. Personally, I'm not familiar with what the problem is with Infinite Warfare. And basically the problem here that people are having is that they were not a fan of this Call of Duty game being set in the future. Call of Duty has gone too far from World War II to basically science fiction warfare. So people were not happy about this, and they say they want Call of Duty to return to its roots or what made this game popular in the first place. So people were not happy about this game at all, and I just think this shows that Activision Blizzard really does not know their customer base well, or they were just putting out a new game for the sake of trying to make more money and not really delivering on what that audience wanted. So moving on here, let's talk about the valuation of these shares. And we're going to look at Activision compared to Electronic Arts, as well as Take-Two, Ubisoft, and then Zynga. So Activision comes in at a price to earnings ratio of 55, a forward PE of 23, and a PEG of 1.8. Electronic Arts comes in at a PE of 32, having the lowest PE on this list, but a forward PE of 23. So these companies have pretty much an identical forward valuation on those shares and a PEG of 1.7. So to be honest with you, Activision and EA are very similarly valued at this point in time. And so that's probably about the normal level for these companies, is to operate at about a forward PE of a 23 and a PEG of 1.7. So it's not looking like it's overvalued. I would say the stock is probably fairly valued at this point in time. Looking at Take-Two, they have a PE of 81, the highest forward PE of 26, but they do have a lower PEG of a 1, so I think there is much more expectations of growth for this company. Ubisoft comes in at a 91 PE, and this is actually a French company, I believe, so I was unable to find any data in terms of that forward PE or PEG ratio. And then Zynga is just basically a garbage company at this point in time. I have no idea what they're even doing. They were primarily making games for phones and computers, but it's a penny stock at this point in time. They have a PE of 82, a forward PE of 20, and a PEG of 0.9. But Zynga is not even a stock I would really compare to a company like Activision. They just have nothing going for them as far as I know at this point in time. And then as far as the price of Activision stock, looking at the analyst price target here, the consensus estimate is at 80.69, and that means that there's about 14.2% upside in this stock. And this stock did actually just come down from a high above $80 per share. So in the short term, if you are looking to buy Activision stock, this might be a good time to look at accumulating some shares because it has had a bit of a pullback. So in my opinion, this is the only thing that really could be a huge growth driver for Activision, aside from having another successful franchise, and that is esports. Now this is an article here from thefool.com. I'm going to share with you guys one snippet here. The Overwatch League, the company's entry into the esports arena, recently completed its inaugural season, and Activision penned an exclusive multi-year deal with Disney and ESPN to televise both the Overwatch League playoffs and grand finals on a variety of the company's television and cable networks. So this is going to be huge. Esports is going to be absolutely massive. I know we talked about this when we were looking at Nvidia stock, and I think this is where they have a lot of potential, is tapping into the esports and the fact that people want to watch other people play video games. Okay, moving on now, we have to talk about what the biggest threat is to companies like Activision, and that is the fact that Fortnite has really come in and disrupted this entire scene entirely. So for the most part, the way that Activision Blizzard is making money with the video games is by selling them at an upfront price, usually at $60 for brand new games, and then they either have downloadable content where people can pay for upgrades, or they have some games where you pay for a monthly subscription. And I believe World of Warcraft is one of those games where you pay every month to have a subscription to that game. Well, Fortnite came in and they really disrupted this market, and this has been pretty much the most popular game in terms of something that has really taken off since Minecraft. And Minecraft, I believe, is in the top 5 most popular games of all time. I believe we're going to see Fortnite right there with that. And the reason for that is because there is a completely free, fully functional version of this game. And then if you do want to go above and beyond that, you can pay for the standard edition or deluxe edition. So by offering this for free and adding a massive amount of value to people's lives, they love this game. And Fortnite has really been extremely disruptive to gaming right now. And all of the gaming companies out there should be worried about the model that Fortnite has really come through here with, by offering that free game and then having the in-game purchases or being able to upgrade to access other parts of that game. And as you can see here, there's some explosive growth here with Fortnite worldwide players. In August of 2017, there was 1 million. December of 2017, they were at 30 million. January of 2018, 45 million. And in June of 2018, there were 125 million Fortnite players worldwide. So this game is absolutely exploding in terms of the number of people that are playing this game. And I think this is going to be a game changer, no pun intended there, for this industry, because it's a new idea of how to make money, offering a brilliant and wonderful game up front and then relying on, in-game purchases rather than charging somebody for the game and then charging them for more additional content. So moving on now, let's go ahead and take a look at the fundamentals here for Activision Blizzard. Total assets have grown every year since 2014 at an average rate of 8.5% per year, and total assets grew just 7% from 2016 to 2017. So there's not any kind of crazy growth going on here with the assets. We have seen a significant increase in the cash and cash equivalents. That grew 159% from 2015 to 2017. And total assets have declined slightly over the last 3 quarters. And something else that we had mentioned earlier is that we are seeing that Activision Blizzard has less and less inventory each year. And that's just due to the fact that there's more digital content and less people buying games off of a disc. But at 8.5% growth of total assets on average, this is definitely not what I would call a growth beast. Moving on now, looking at total liabilities here. Total liabilities declined from 2014 to 2015, but increased from 2015 forward. And total liabilities grew at an average rate of 13.3% from 2015 to 2017. Now, total liabilities grew 10.5% from 2016 to 2017, compared to 7% growth of total assets. And I never like seeing when liabilities are growing faster than assets, but I will say that Activision Blizzard does have a great coverage of their debts here. Current assets have great coverage of current liabilities, a ratio of 2.98 to 1 in the most recent quarter, and total assets have great coverage of total liabilities, 2.36 to 1 in the most recent quarter. And that's essentially what I'm looking for, is at least a 2 to 1 ratio where for every dollar they owe, they have $2 in assets. So while the growth of liabilities has outpaced growth of assets in recent years, Activision Blizzard maintains excellent coverage of debts, which is something that is good here. We see they have a relatively attractive balance sheet. Moving on here, let's take a look at the total revenue. Total revenue has increased every year since 2014 at an average rate of 17.9% per year. However, total revenue grew just 6.2% from 2016 to 2017, so very little growth there in terms of total revenue. Gross profit increased every year since 2014 at an average rate of 17% per year, so just slightly behind the growth of total revenue, which means that cost of revenue has crept up a little bit. However, we see here that gross profit increased 7.2% from 2016 to 2017 compared to 6.2% growth of total revenue, indicating slightly higher profitability and better margins. So as we can see here, net cash flow from operations increased 71.2% from 2015 to 2016. 2016 was by far the best year as of the recent years for Activision Blizzard, and then net cash flow from operations increased just 2.7% from 2016 to 2017. So wrapping up here, let's take a look at the performance of the stock. Over the last year, Activision stock is up 17.2% compared to a 16% return from the S&P 500. So they've just slightly outperformed the S&P 500. And over the last 5 years, Activision stock is up 307.7% compared to a 70.7% return from the S&P 500. So over the last 5 years, they have significantly outpaced the overall market. Now with a beta of 0.65, I would say this is a suitable pick for beginners. It's not a stock with a ton of volatility. And I understand that a lot of people might not be interested in investing in stocks, but they would like to own part of a gaming company. And I know I've talked to people in the past, they say, I want to invest in the stock market, I want to buy stocks, but I want to buy a stock of a company that I really love and I want to get behind. And there are a lot of die-hard fans of Activision and Blizzard and these games out there. And so people who want to buy this stock, if it's going to be what gets you started with the stock market, I'm all for it. Personally, I would never invest in any gaming companies because I don't play video games. And so as a result, I don't understand these companies and I wouldn't know what to look for. So if you're going to be buying Activision Blizzard, you're going to be keeping track of their upcoming games, their releases, and only you are going to know whether or not you believe this is going to be a huge success or a huge failure. I would have no idea because I don't play these games. So you really want to understand what it is you are investing in when you're investing in any company's stock. But anyways, guys, that's going to wrap up this video. I hope you enjoyed it. And if you guys have any comments or feedback, let me know what you think over in the private Facebook group. Or otherwise, I will see you in the next video.